Welcome to this Bell Direct weekly update. I'm Julia Lee, an equity strategist with Bell Direct. And with half-year reporting season coming to a close in February, there are still plenty of stock ideas out there. So let's start off by having a look at some stock ideas by different brokers. We're going to start off by having a look at Morgans. And Morgan's saying that the stock price reaction has been quite unpredictable this earnings season, which represents opportunity. Some companies which reported strong earnings but were unrecognized in terms of share price reaction includes the likes of Bapcor, APN Outdoor, Avio, JB Hi-Fi, Inghams, as well as Webjet. Some standouts for Morgans from reporting season include Bapcor, Steadfast, SDA, as well as Oil Search, OSH. Moving on to look at Macquarie and reporting season. They've made some adjustments to their ratings on different stocks, and starting out with the outperformers. They've upgraded to outperform stocks like 3PL, Ainsworth Gaming, as well as Country Road, Macmillan Shakespeare, Navitas, as well as Premier Investments. On the flip side though, we've seen downgrades and underperforms slapped on stocks like AWE, GWA, Harvey Norman, as well as Insurance Australia Group. To the small cap portfolio, they've added Mantra Group, MTR. They've also added to their large cap portfolio Lendlease. They've switched out of Harvey Norman and into JB Hi-Fi, and also removed from their model portfolios Link, LNK, as well as Goodman Group, GMG. Looking at Morgan Stanley now, an interesting piece here on timing being of the essence, and just looking at factor timing. Their quant team crunching some numbers, saying it's a favourable environment for momentum strategies at the moment, while value strategies, it's looking like a neutral environment. So if we're looking at momentum strategies, some of the stocks they like in terms of momentum include in the mining space BlueScope Steel, South32, and Whitehaven Coal. Outside of the mining space, liking Ansell, Super Retail, as well as ANZ, but keeping away from Brambles, Healthscope, as well as Nine Entertainment. Of course, this week the main event is going to be US interest rates, with the FOMC expected to raise rates in the US for the month of March. Market pricing in around about a 95% chance of a rate hike in the US. And I guess the positioning for that has been long US equities, long the US currency, short bonds, and a short-term negative for commodities based on the strength of the US currency that we're seeing. But a very different scenario here in Australia, and looking at Macquarie and the macro view, where we are seeing divergence in expectations around interest rates from the market compared to economists. Economists are still predicting 1 or 2 rate cuts over here in the US, while the market is predicting that the next move in rates in Australia will be upwards. Look, the strength in terms of housing is a constraint on interest rates, which means that we probably won't see any more cuts, but there is a clear divergence in terms of the market. Macquarie, though, is saying that it expects no rate hike until February 2019. I thought that was a typo, but 2019 is when they expect the next rate hike here in Australia. Time to look at some of the sectors in the market, and let's start off with UBS and resources. UBS once again crunching the numbers of commodities at spot prices and what that means for earnings this year. Starting off with BHP Billiton, and for 2017 that means an upgrade of 23% to earnings. For Rio Tinto, an upgrade of 36% to earnings. For Fortescue, for the financial year, that would mean an upgrade of 17%, while for Whitehaven Coal, that would actually mean a drop of 8% in terms of earnings for its financial year. And for Iluka, one of the biggest boosts in terms of mineral sands, where for the calendar year 2017, it would be a boost of 75% to earnings if we were to value the earnings at spot prices. Looking at Goldman Sachs, and Goldman Sachs crunching the numbers on the insurers, and of course we saw updates from both Insurance Australia Group as well as Suncorp Medway on the perils insurance and the hailstorms that we recently saw on the in northern New South Wales. Goldman Sachs saying that it prefers Suncorp Metway. It remains neutral on Insurance Australia Group as well as QBE Insurance. And finally, looking at odds in the REIT space. Now, the property space is pretty interesting at the moment. Most of the property stocks are trading on single PE ratios with relatively high yields. There's a lot of negative sentiment, especially in terms of shopping centre space over in the US, where it does look like there's a lot of capacity coming online, but the demand just doesn't seem to be there. But Ord's saying, look, it prefers stocks like Westfield, Stockland, GPT, as well as Lendlease, although it is staying away from Investor Office as well as Dexus. So looks like preferring that shopping centre residential space to the office space in that property sector. So that was the weekly update. I hope you've seen plenty of stock ideas as well as ideas on asset allocation. The big event this week is going to be US interest rates, where the market's pretty much factored in a 25 basis point hike to US interest rates. I'm Julia Lee from Bell Direct. Hope to see you next week.